Ladies and gentlemen, Greg Michalowski from ForexLive.com. Today's date is November 8, 2023. This is the Kickstart video for today, where I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. So let's get started. And I'm going to start by looking at the 4-hour chart in the euro versus US dollar. You see this high right here, you see this low right here. This is a trend move to the downside. And what you want to see in a trend move to the downside is a move above the 38.2% retracement. That comes in at 1.07637. You can barely see it there. We fell short of it by about 6 pips or 7 pips or so of that 38.2% retracement on Monday, and started its rotation to the downside here. That's a bit of a concern. Why? Because you want to, if the buyers are going to take more control, they need to get above the 38.2% retracement of a trend type move. They couldn't do it. We also are moving back below this swing area here. The swing area is comes in between the 1.0674 to 1.0694. The level is defined or started to be defined way back here, where we had different swing lows and swing highs. You can see how the market sort of reflected or deflected off of this area, moved above it, it was more bullish, moved below it was more bearish, and then we stay below it here, and that forced price to the downside. We returned to that level 2 or 3 weeks ago, and also in the trading last week, before moving above it on Friday and extending up to our high price, extending toward that 38.2% retracement. Well, in trading yesterday, the market moved below that swing area and then rebounded to the upside. I'll talk more about the rebound to the upside in just a second. But in trading here today, we are back below that swing area. It comes between 1.0674 and 1.0694. We're currently trading at 1.0665. So we are below that. If we stay below that area, that's more bearish, and we'll look for more downside momentum. Now, I said I would talk about the low price yesterday and the bounce off of yesterday, and to do that, I'm going to look at the hourly chart. When we look at the hourly chart, what do we see? Well, we see the low prices from yesterday stalling against two technical levels. One is the 38.2% retracement, the move up from last week's low to the high price that we saw in trading on Monday. That 38 came in at 1.0664 right here. We also bounced near the rising 100-hour moving average, and so we had dual levels to lean against, and traders did lean. When you lean, you put buy against a technical level and a stop just below it, so you're risking a little to hope to make more than a little, and those traders who did that trade did make more than a little, more than their risk on the trade. So good for them. The price did move above that swing area and got above the 106.94 area that we saw on the 4-hour chart. But in trading here today, you can see how it had difficulty in staying above that level, and then started to see more downside. We fell below the 100-hour moving average, a blue line in this chart, which was an easier hurdle today because it is up moving to the upside. We also fell below the 74 level, and we came up and retested that 74 level in the early New York, late London morning session, and rotated back to the downside. As mentioned, we're trading right around the 38.2% retracement level. If we get below that level, we could see a rotation further down to this swing area, and also the rising 200-hour moving average and 50% retracement of the same move to the upside. So this is similar to what this was in trading yesterday, where we had the 138.2. In this case, we have the 200-hour moving average of 50% retracement. So sellers are more in control. Watch the 74 level, watch the 100-hour moving average 94 level. If you're more bearish, you don't want to see the price move above those levels. If we stay below those levels, it's more bearish, and we look toward the 200-hour moving average of 50% retracement. Get below that level and opens the door for further downside momentum going forward. So that's a detailed look at the euro versus US dollar. Let's take a look at the dollar versus yen. And if we look at this we'll start at the hourly chart here. What we saw this week is a move, a corrected move to the upside here on Monday and Tuesday, and now on Thursday we're extending even higher, and in the process the price moved above the 100 and 200-hour moving averages yesterday, and then found base against those moving averages right here. That gave the go-ahead to move to the upside. Now we did move higher, but we fell short of this high rate through here. We also fell short of the 61.8% retracement That's this level right through here. And the market rotated to the downside. But as you can see in the Asian session, we started to rebuild. In the last few hours, we've seen the price move above the 61.8, above the old high right here. And that is going to be now close risk. So watch the 150.74 up to the 77 level as a close support. We're currently trading at 94. As long as the price remains above those levels, the bias remains more to the upside. We could see further upside momentum in this pair. If we start to move back below these levels and maybe get below the high price that we saw from yesterday, that would open up the give the buyers some cause for pause, and could see further momentum down toward the 50% retracement, where 50% always at a level where you want to see what happens at that level from a buyer's and seller's perspective. Do the buyers want to stay above that level, or do the traders want to stay above that level and keep the bias more to the upside, or do they want to go below? That will be a key level. If the price were to get below the 74 level, right now the buyers are in control above that level. Let's take a look at the sterling versus US dollar next, and again we'll look at the hourly chart. And similar to what we saw in the euro versus US dollar, well, not really similarly, but somewhat. We did come down and toward the 100-hour moving average. We broke below it in trading yesterday, but we did stay or find support against the low of a swing area down at 122.614. I'll go to the 4-hour chart, and here's that 614 level. It goes back in time to here, and then we found a ceiling here, and then it became a floor through here, and then broke below it, found a ceiling right through here. And we did move above and below it through here, but then reestablished the level before moving to the downside here. So there's a number of different times where this level was of importance. We moved above it on Friday, and we came back down to it yesterday and found support buyers against it. Going back to the hourly chart, we can see that the price more recently has moved below that level, come back into that level. Let's watch the 122.758 as a level of importance for our trading here today. Bias defining level. If the price is able to stay below that, it's more bearish. If we move back above it, maybe we get some more covering to the upside. On the downside, we do need to get and stay below the 50% retracement of the most recent move up from this low right here, October 26th, to the high price that we saw right through here. The level comes in at 122.47. We did try to move below that level, but could not extend further. That was the first try. We'll see if the second try does any better for it. But so right now we are seeing the euro versus US dollar lower, the sterling versus US dollar lower, so dollar being strength, and we're also seeing the dollar yen move higher. So the dollar is king today in those three major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye bye now.